Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, July 17th. Prices are mixed this morning, however, trending higher as we get closer to the pause. Corn right now is steady to about a penny better. That in two-sided trade. Soybean prices, they are up 1 to 2 cents. Bean oil, that has rallied up about 35 to 40 points, while meal is down about a buck, while wheat is about 2 to 4 cents lower. Yesterday, the announced trade deal with Indonesia, a small new crop sale to an unknown buyer, and a healthy amount of fund buying did trigger almost a 20-cent rally in soybean prices. We showed that speculative traders were net buyers of about 10,000 contracts yesterday, after being net sellers 4 out of the 5 previous sessions. Money managers are likely still holding a rather small short position at about 10,000 contracts. Open interest from yesterday's trade, however, was up almost 9,000, an indication of fresh money coming back into the market on the long side. Speculative traders were buyers of about 5,000 corn, 1,000 contracts in both meal and Chicago wheat, while flat in bean oil. Export sales a little bit later here this morning. Yesterday's EIA report showed that ethanol production from last week increased to 320 million gallons. That was up from 319 the previous week and is just above the level needed to reach the current USDA corn usage forecast at 5.5 billion bushels. Weather-wise, a seasonally cool pattern has settled in across much of the northern half of the Midwest. It won't last too long, however, as heat in the southern plains begins to build across the western Corn Belt this weekend and into the central Midwest by early next week. A lot of 100 to 105 degree readings for the southern plains and low to mid-90s for will be common across the central and eastern Corn Belts by the middle of next week. Rainfall over the next week will favor the eastern part of the northern plains along with the central and eastern Corn Belt. 1 to 2 inches will be common in these areas. Little to no moisture, however, for the central and southern plains. I think so. Part of yesterday's soybean rally, I think, was just simply adding some weather premium back into the market in the event heat sticks around for a little bit while perhaps rains taper off in the central Midwest as the peak pod filling stage is here in late July and early part of August. Some talk of corn pollination issues across portions of the Midwest due to lack of nighttime cooling. That said, however, I don't think it's been widespread enough to prevent average yields from at least reaching the 181 bushel per acre record yield the USDA is currently forecasting. I think the market is probably trading a yield right now somewhere in about 183 to 184. Corn has performed well despite the Trump administration desire to see a lower consumption of corn syrup from the American diet. Resistance for D's still rests at at 430. There was a gap area left from the sharply lower open early last week. Next resistance is the 50-day moving average, that at 435.5. But despite the rebound in price, spreads do remain weak. August soybeans holding trade above that $10 level, making a 1-week high here overnight. Next major resistance, really not until we hit the 100-day moving average. That comes in at 1037.5. The 100-day moving average resistance for Nova is at 1027.25. The Rosario Grain Exchange, they raised their Argentine production forecast 1 million metric tons to 49.5. That's just below the USDA's 49.9 million metric ton estimate. Crush margins did set back a touch yesterday after jumping out to a 9-month high earlier in the week. August oil, that's rallied now to a fresh 1-month high. Resistance coming in just below the June high, just below 46 cents. Inside trade for wheat for Kansas City and Chicago, new 2-month low for Minneapolis futures. The Rosario Grain Exchange did lower their Argentine production forecast 700,000 tons to 20 million metric tons. Thanks for listening, everyone. Have a great day.